Hi, this is Jack from Alpha Charts with a state of the market video. Today is September 13th, 2020. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you enjoy these videos, please like and subscribe to my YouTube channel. I am also on Twitter at AlphaCharts365. I post pretty much daily charts, ideas, things that I'm seeing going on in the market. So that's a good place to find me pretty often. All right, so 3056 is likely, and potentially even this 2890 area. So those are all areas that I think could very much be in play. 2870, 2890, somewhere around here. Right now, with the type of volume that's coming in, this looks like downside is more likely than more upside here. But again, it has to break 3291-ish for that to be to come to fruition. But right now, this looks like it could be more dangerous coming up soon. All right, going to Qs. The Qs much healthier as far as further from its breakout. Right, there's the breakout, retest, another test, moved higher, and now we get the cross, and there's a 65-day. Where do I think this could potentially go? Well, the 250-ish level makes a lot of sense, right? And then even the 50% retracement around 234-ish, that also makes sense. A lot of volume coming into the downside here. Again, so to me, it seems like more downside is in the future. I am trying personally something new this time. So a lot of times I would try to go to cash when I see something like this. But if my positions are holding up well, which knock on wood, a bunch of them are, even though they may be moving to the downside, just not quite as much. I started a long SQQQ, which is a triple leverage short Qs ETF. It is a very short-term type trade. I'm just looking, this cross is what got me in it, which is the 9-day, 23-day EMA cross to the downside. And so I'm looking for maybe a fairly quick move to this level or this level, and then I should be out. So I'm, again, not a long-term trade at all, very short-term trade, but more of a hedge than anything else to help keep me in that position. And it's only about I think it's a 14% position, so it's a small position. But again, so looks like more downside is coming. Again, these are the levels that I am watching. Listen, if 234 breaks in any real way, that's a big deal. And just looking at the measured move, from here to here is, we'll call it 10.7%. And if this breaks from here, 10.7%, makes sense to get into this 50% retracement, especially if we get some type of move higher and then the breakdown. That would bring us, right in this area. So this 50% makes a lot of sense as a measured move, as a Fibonacci level. So it's got multiple things going for it. Do I think it has to go exactly 234? Nope. It could go 238 or something like that. It could break down slightly below it and then break back above quickly. Those are all potential scenarios. Also, maybe the 65-day moving average holds and we just start moving higher again. That's another possibility. So we just need to be open for all this. Again, I do think my bias short term is that we move lower. Longer term, I still think this is a bull market and we're moving higher. So I think those are things to watch out for. All right, IWM, again, weaker than the other, sitting on the 65-day EMA. Cross already happened a few days ago. Lots of negative volume coming in. Nothing good here happened in IWM. Let's go on to XLF. Now, financials are interesting because everything was red on Friday. Financials were a nice green body, right? That looks really good. So the chart that I have been watching and showing y'all is the financials versus the SPX. And it's been a dog since 2018. But now potentially, again, why is this green line? Just to recap real fast. Green line is important because this was the relative low from March 2009. It's a big deal, right? This green line. And we dipped below it, right? And now we're breaking back above it. False breakdown on a relative basis. Coming here, and you see we broke out, came back, starting to move higher again. I think financials are in position to potentially outperform going forward. Now, outperform can mean a lot of different things, right? SPX and XLF could be going down, just XLF at a lower rate, XLF, but also could be moving sideways or going up while SPX it goes down. That's another possibility. Or they both could be going up, but XLF at a greater rate or speed than SPX outperformance, right? So either way, it looks like outperformance. It wants to. It's trying to put in a bottom here. Following wedge, breakout, great trade. This, is a potential big, fast mover. And we're not seeing it quite yet in the stock price. But again, a green day on Friday, that says a lot. SPX was, I guess it was green too, but it was flat, right? For the most part, it was flat. But XLF was up. Let's see what it was up. It was up 0.69%. So good outperformance on a relative and absolute basis. Looks like it's just a consolidation, sideways move. I would definitely look for XLF to perform. Full disclosure, I do own a couple banks, and I am long a few XLF calls. Moving on, SMH. It's a big ETF right here, right? SMH powers our whole entire life. Semiconductors, you have the breakout right here, right? Moved higher. I wouldn't be shocked to see this kind of retest this area. I think this area is paramount that it holds, break and hold below this area, and things could get a lot dicier. I would say that things are a lot worse. Again, the cross already happened here. So the 152-ish, for me, semiconductors have been an avoid for a while. Even though they've been moving higher on a relative basis, they've been just okay. So this is what I'm watching for SMH. Again, moving down, you can see the volume is pretty intense on these moves. So it's definitely something to watch for. Looking at lumber. Now, lumber is holding up pretty well, right? This was an important area, remains to be an important area, pulled back a little bit, not huge. Things are holding up, and commodities as a whole are holding up well, which I think is pretty good. That's a bullish sign. Look at Freeport. Again, this is one I am long, full disclosure. If you look at tech, beautiful move right here. So you just look at XME as a whole. We're hitting this potential resistance area right here in XME, which is the metals and mining ETF, but holding up pretty well. If we can see it bust out above 2450-ish, I think that's a big spot for metals and miners, and that would be a place that we'd want to definitely look and potentially get long. Again, I am long FCX already. Moving on to SPX versus TLT. Now, this is more of a risk on, risk off indicator. And as you can see, came back in a little bit. The cross hasn't quite happened yet. Wouldn't be surprised if you see a little flight to safety, a little move down here. This was an important level, just going out to the weekly, so you can see how important this level was. Resistance, resistance, resistance. Wouldn't be shocked if this comes down, tags this area for support, and then we bounce higher and things get real bullish again. But as of right now, you see people are starting to get a little bit more defensive. Let's look at credit spreads. This is IEI versus HYG. And, we got to this area, we'll call it 157, 1.57, and it became some kind of support here, right, on a relative basis. And now we see that the short-term moving averages are starting to cross and move higher, and the 65-day EMA is starting to flatten. So if price gets above this 1.59, that means spreads are starting to widen again, and that would definitely be a bearish scenario. So this is definitely something I'm watching. Right now, it's not there. And we're just moving sideways. And that could just be what we do. We just jump around sideways here for a while. We want to see this kind of this relative credit ratio to move lower below this 1.57-ish area. That would be definitely the bullish case. Again, move higher, and that would be a more bearish case. All right, moving on to put call ratio. Equity only put call ratio. Markets are never going down in this area. Markets are never going up in this area. Okay. And what are we seeing? We are right kind of in the middle. So some people got bearish, but not extremely bearish. We're just not extremely bullish anymore. Someplace in between. Can very well go much higher here into this area. That would be a very people on one side of the boat to the bearish side, and that would be time to get bullish, right? You can see anytime we get really bearish in this area, you know, we don't stay bearish long. We can stay bullish for a while, right? We can stay bullish for a while, but we usually don't stay bearish for all that long. So that's what I'm looking for. Maybe one more move to this area as things kind of break down, things find support. And once we're in this area, that would definitely be a potential signal to get bullish again. Let's go ahead and look at the CNN Fear Greed Index as it's 58, right? So again, there's not a lot of bearishness in the market, more than it was, but not a lot. You know, this would be in the area that I like to see. It doesn't have to be 0, right? It could be, you know, someplace in here. That's fine. But there's still some bullishness in the market. Let's see what else we got here. Next up, we're going to look at, let's look at the VIX. Here's the VIX. Now, this is the interesting thing. The VIX, as all this stuff is happening in the market, is actually down, right? So, I mean, there's a lot of reasons for that, and I'm not a VIX expert, but you'd expect the VIX to be moving higher, and it's not, which is why there's a potential that this is a very short-lived move down, and we could be moving higher, because as of right now, the VIX isn't confirming the negative sentiment that's starting to creep into the market. You know, watching this snap back and get above this 34-ish area, 34 and a half or so, 35, that would be something. It is considered elevated to me. Anything above 24 and a half is I consider elevated. So it's still a cautionary. You know, we liked it back here, don't like it as much up here. But again, we're not seeing this big move higher in VIX as I would have expected. May happen this week. We'll see what happens in the markets. But the VIX is not really saying be careful right now. That could change on Monday. And the last chart we want to look at is the value line geometric index. Value line geometric index. Here we go. You know, and it's breaking down a little bit, right? So this is more of a breath thing, and we're breaking down. You know, again, it just confirms that things aren't going as well as they were. You know, let's look at the equal weight S&P. You know, equal weight is, you know, again, moving to the down, just like all the other charts. You know, and it never made a new high, which is interesting, right? And we were watching that too, right? We had the S&P, the cap weighted, making new highs. The equal weight didn't. So that was definitely a potential sign of narrowing breadth of the market, and you know, it tried but it didn't make it. So when we recap everything, you know, we're breaking down. We have the moving average, shorter term moving average cross. We haven't crossed the medium term moving averages yet. You know, I think that the levels to be aware of, obviously the 65-day at 265, you know, price above that. And you say, okay, maybe the correction is going to move sideways here. We break down below that, I think 250, and then, you know, 234 to 240-ish would be areas to watch. We'll see. Good luck trading this week. I hope you all stay safe out there. I hope you all manage risk, know your risk and time frame, and take care.